Good morning. Tim Nyland here. Today is November 18th of 2020, and this is our weekly internal strategy call with Zacks Professional Services. Today we're going to do an equity strategy piece on cell service providers. And what we're going to do is we're going to start out by looking at an Advisor Tools performance chart of the year-to-date performance of Verizon, T-Mobile, and AT&T. And I like to always refer to this space as being more like utilities, actually being more like bonds and having bond or fixed income type characteristics, low growth, high dividend yields. But we've got a standout this year, and it's largely due to the combination of T-Mobile and Sprint back in April. This outperformance that we see with the combined T-Mobile Sprint being up almost 65% this year. If you want to know who's winning the 5G race, just look no further than the valuations and this performance. T-Mobile up a startling 65% this year, Verizon flat at -1%, and AT&T actually down by 26%. Okay. Note that T-Mobile has a 0% indicated yield, which is definitely uncharacteristic for the space, but it's also indicative of how fast these guys are growing. So a lot of reinvestment going on in the business. You can see that playing out in adoption rates here with FY3 estimates being up to 29% on EPS growth, and it's commanding a 40 multiple right now on forward earnings, which is tremendous for a mobile company. Keep in mind, I believe it was earlier this week, it's been disclosed that Warren Buffett has taken in about 2.4 million shares for Berkshire Hathaway. So no surprise there. Obviously, given this type of growth and this kind of traction, T-Mobile is definitely making headway. Take a look at Verizon right now, down 1%, and Verizon just keeps chugging along doing what it always does. It pays out a tremendous yield, and it offers basically GDP growth. You'll see FY1, FY2, and FY3 forecast growth rates down here between 2 and 3%. And they've been doing this for years, and 2022 estimate of 2%, chugging along at about a 12.2 forward PE. Nothing like the growth that T-Mobile is experiencing. And so if you look at then the opposite end of the spectrum from T-Mobile, we have AT&T, which has basically been on the downward slope ever since 2016. And because of this decline in price, we've now got an indicated yield that's clocked up to around over 7%, which is startling. So we've got amongst the three top cell service providers, you've got T-Mobile sitting at no dividend, but growing tremendously. That's up 65% this year. And you've got AT&T at the other end of the spectrum, who's been on the decline since 2016, has pushed the indicated yield up to 7.18%. A lot of financial advisors have been asking me, what to do with their AT&T stock. And my response is, look, if you're holding it for yield, this is obviously a deep value play right now. The message that you're receiving more or less from the remainder of the buy side is that the buy side really has no confidence in management's ability to even deliver on these growth rates, which is what we see with forward multiples at roughly the 8-9 times forward earnings. So from a yield perspective, you're probably okay. I'm not sure exactly when this turns around, but given AT&T's strong leadership, I'm sure they're working on a plan. But they've got some healthy competition in this space. Again, we're going to look at the operating metrics here in just a minute. But we all know the wireless space is very, very saturated here in the U.S. So a lot of competition, a lot of price cutting, and especially with T-Mobile's new low-cost plans that they've rolled out. So speaking of operating metrics, we have these available to Advisor Tools users, but I wanted to make a special case out of some data tables that I found out on the internet. And whenever you're looking at third-party research out on the internet, I want to use this kind of as case in point to just be aware, be careful of the data sources, be leery and wary of what you're looking at. In this particular data table, it was sourced directly from T-Mobile, AT&T, and Verizon third quarter earnings releases. It says here year over year, YOY equals year over year. And, the first red flag I have is this 110% EBITDA. So we're not going to talk about this column right now. We'll get back to that in just a minute. But I did want to just mention the postpaid net additions. These are net service additions and the postpaid net phone additions. Keep in mind postpaid as opposed to prepaid. So in other words, these cell providers are traditionally judged on their postpaid additions versus a prepaid cell plan that doesn't carry as much weight because it's non-recurring. So again, T-Mobile disrupting the wireless industry with the Sprint merger and the rollout of all these low-cost plans, but also, for those of you who are not aware, it was Sprint's 2.5 gigahertz spectrum that really put T-Mobile on the forefront of the 5G race. And you can see the net additions here relative to the rest of the pack, and including the postpaid net phone additions still topping the rest of the group as well. So T-Mobile definitely winning the 5G race here. Again, Advisor Tools has these operating metrics. There's no need for you guys to go out and try and surf the internet for this stuff, including our advisor customers. These are all in Advisor Tools. We do have a really, really nice coverage universe of these consensus models, and you get access to them by simply entering in a ticker and going into the interactive desktop from the Key Stats tab, looking for the consensus model icon and just clicking on it. You'll have a prompt to open up a spreadsheet, and in there will be all of your line item consensus information as well as all of your operating metrics and other key items. You'll just click through the tabs and scroll through the spreadsheets to find all that information. So Advisor Tools has them. I would encourage everyone to have a look when they get a chance. Okay, so again, let's talk a little bit about this EBITDA number, 110%. Pay attention to the details. Make sure you're looking at apples to apples. Keep in mind that T-Mobile and Sprint merged in April. And when I looked at this 110% to verify the data, I found that the year -1 EBITDA number did not include EBITDA for Sprint. So we, in fact, were looking at financial statements that were not consistently stated, and that's a huge issue. So I went back and using the Zacks link, the spreadsheet add-in for Microsoft Excel, put together a quick spreadsheet, T-Mobile and a delisted stock Sprint, grabbed the EBITDA from 9/30 of 2019, added it together with T-Mobile's from 9/30 of 19, and brought that year -1 EBITDA from 32.54 up to 57.10. It dropped the growth then from 110% down to 21.2, which is much more realistic. Now, keep in mind that's total operations. This particular table says just for the mobile segment, it's going to be close, but the idea here is that this is a good proxy. It's definitely a lot less than 110, which is the point I'm trying to make. It's still industry leading, but much less than 110. So again, just some key takeaways here. We've got an interesting horse race going on in the cell service provider space, and there's definitely a clear winner. It's T-Mobile, and AT&T is definitely the clear laggard, and Verizon is literally just chugging along. So T-Mobile is leading the race to 5G adoption. They're definitely leading the segment with postpaid net service and handset additions. And the key is that these valuations reflect this leadership. So this can continue so long as T-Mobile can continue this type of growth. Obviously, when this growth starts cooling, this market we know will get saturated. We've got a couple of years probably here. Look for this multiple to then start contracting. So just be advised. That's all I've got for this week. If you've got any questions at all, please email us. Hit me up on LinkedIn, connect with me on Twitter, and this slide deck can be made available by request. You can just email us at advisortools@zacks.com or zrs@zacks.com. If you'd like to speak with me personally more about the cell service providers or anything else, you can reach out to me via email, contact your sales rep, or contact account management. Thank you, and we will talk again next week.